A very good morning, everyone. My name is Shavina, daughter of Chandran, and my matrix number is 307875. Today, I will be presenting my individual report, The Determinants of FM Global Logistic Holding Berhad Performance. This study aims to identify the internal and external factors that has substantial impact on the firm's performance. Let's look at the company background. FM Global Logistic Holding Berhad is established in 1988, headquartered in Port Klang, Malaysia. It also is a Malaysian-based company that provides integrated international and domestic logistics services, including sea, air, land freight, warehousing, and supply chain solution. FM Global Logistic Holding Berhad also operates in many countries like in Malaysia, Thailand, Indonesia, Vietnam, India, Australia, Philippines, Singapore, and the USA. Now, let's look at the problem statement. As for the problem statement, FM Global Logistic Holding Berhad has been targeted by scammers by misusing its name, logo, and employee credentials in fraudulent communication. This damages the company's reputation and weakens stakeholders' confidence. These scams activities have mainly occurred through email, phone calls, and social media platforms. The second one is the company also have faced legal disputes involving allegation of negligence and improper handling of customer goods. Such incidents reveal gaps in operational process and the need for clearer contracts and accountability. A notable example is the case with the Prestige Sports Centurion Berhad over unpaid services and alleged negligence. The last one will be the FM Global Holding Berhad experienced a significant drop in revenue due to the normalization of freight rates after the pandemic and global trade slowdown. This reflects the company's vulnerabilities to external factors and market fluctuation. The decline in revenue for the year ending June 30, 2024 was reported at 13.8%. Next, we are going to look at research objective. First one is to ascertain the factors that affect the FM Global Logistic Holding Berhad's performance based on the internal or firm-specific factor. Second one is to determine the factors that affect the FM Global Logistic Holding Berhad's performance based on the external or macroeconomics factors. Third one is to investigate the factors that affect the FM Global Logistic Holding Berhad's performance based on the internal and external factors. We are going to look at the literature review. The first one is liquidity risk. According to the Basel Committee, liquidity risk defined as the extent to which an asset can be quickly traded without too much of a price concession. Next, operational risk. Based on cruise perspective, operational risks are operational losses that can be very unpredictable and often exceed the scopes of estimates. Operational risk is the chance of losing money when a firm's internal processes, people, or system don't work right, or when something unexpected happens outside the company. Next, we are going to look at the market risk. Market risk result from the fluctuating prices of investment as they trade in global markets. Based on Jorian perspective, market risk stands for the probability of the financial loss due to unfavorable move in market variables such as interest rates, exchange rate, equity prices, and commodity prices. Next, we are going to look at sampling technique, which is under methodology. For sampling technique, the data obtained from FM Global Logistic Holding Berhad's annual report from 2014 to 2024. There are three models shown by the diagram below. Model 1 represents how internal factors relate to firm's performance. However, Model 2 represents how external factors relate to firm's performance. Model 3 represents how both internal and external factors related to firm's performance. Then, extracted data will be calculated in this sampling technique to financial ratio like ROA, ROE, ACP, current ratio, and etc. This ratio will be analyzed through linear regression by using SPSS to generate descriptive statistic, correlation, model summary, and coefficients. This ratio also will be used in trade analysis to show its movement through 10 years. Is descriptive statistic. A descriptive statistic is a data analysis that explains or shows significant information, enabling patterns to be analyzed. The company demonstrates strong liquidity with a current ratio mean of 2.0310, which indicating it has twice as many current assets as liabilities with a minimal variation. Next, ROA averages 4.94%, showing efficient asset utilization with low volatility, while ROE stands at 8.26%, reflecting moderate shareholder returns with some variation. For credit risk, the average collection period is 75.07 days, suggesting efficient receivables collections, while the debt to income ratio of 8.899 highlights high financial leverage with considerable variation across firms. For the operating ratio, it is 21.25%, indicating a consistent portion of revenue spent on operations, and the operating margin is 9.65%, showing limited retained operating profit with slight variation. Next, macroeconomic indicators reveal an average inflation rate of 1.98% with some fluctuation, an interest rate of 2.8182%, then stable exchange rates and unemployment rate averaging 3.656%, reflecting stable labor market condition. The GDP growth rate averages 4.11%, indicating steady economic expansion through a standard deviation of 3.4958%, which suggests some volatility. The industrial production rate shows positive output at 3.682%, with considerable variation. Lastly, the CG index averaged 67.83%, which indicating moderate adherence to governance standard with some variation among firms. Next, we are going to look at the correlation. The current ratio shows a strong negative correlation with ROA, negative 0.622, and ROE, negative 0.665, indicating that as liquidity increases, profitability tends to decrease, possibly due to excessive current assets. It has a moderate negative correlation with average collection period, which is negative 0.561, suggesting that better liquidity is associated with faster collection of receivable. The correlation with debt to income, which is negative 0.326, and operational ratio, which is 0.477, is weak, implying minimal relationship. Then, the current ratio has weak negative or negligible correlation with macroeconomic factors, such as inflation rate, which is negative 0.0443, and interest rate, which is negative 0.543, and exchange rate, which is negative 0.053, showing limited impact from external factors. Weak negative correlation is observed with CG index, which is negative 0.370, suggesting that firms with higher liquidity may have slightly lower corporate governance scores. Overall, the data implies that while maintaining liquidity is important, an excessively high current ratio may negatively affect profitability, and its relationship with external economic factors appears weak. Then, for model summary, in Model 1, the R square of 0.742 implies that the predicted variables explain about 7.42% of the variation in this FM Global Logistic Holding Berhad performance. In Model 2, the R square of 0.324 implies that the predicted variables are accounted for 32.4% of the variation in this FM Global Logistic Holding Berhad's performance. As for the model summary 3, the R square of 0.785 implies that the predicted variables, which are CG index, debt to income, average collection period, operating margins, unemployment rate, industrial production rate, and inflation rate are accounted for 7.42% of the variation in this FM Global Logistic Holding Berhad's performance. Moving to coefficient, ROA is statistically significant at 0.05 level, which p-value is 0.043 and has a negative relationship with the current ratio, meaning an increase in ROA leads to the decrease in current ratio. However, for the debt to income, average collection period, and CG index are not statistically significant, which shows no meaningful impact on current ratio. Overall, only ROA is statistically significant predictors of current ratio in this model. Next, for the external coefficient, inflation rate shows a negative relationship, which the beta is negative 0.511 and p-value is 0.463. And for the interest rate shows a positive beta, which is 0.211 and p-value is 0.590. And for exchange rate, same as previous one, beta and p-value is positive. And for industrial rate also shows beta and the p-value is positive as well. Next, internal and external coefficient. The regression analysis indicates that the average collection period is the only independent variable showing marginal statistical significance in predicting the current ratio with a p-value of 0.081. It shows a positive relationship with one standard deviation increase in average collection period increases the current ratio by 1.161 standard deviations. In contrast, other independent variables are not statistically significant. The remaining independent variables, which is debt to income, operating margin, inflation rate, unemployment, industrial production rate, and CG index, are not statistically significant determinants of the independent variables current ratio according to this study. Next, for the final part recommendation, FM Global Logistic Holding Berhad have to enhance corporate governance and transparency in their company. Building corporate governance system is crucial for maintaining stakeholder confidence and boosting long-term result. The company needs to conduct regular performance review and clarify board responsibilities, plus foster a clear ethical business culture to attract investors and prevent governance issues. Furthermore, improved management of operational risk is also important. Since operational risk came out as a major influence on FM Global Logistic Holding Berhad's performance, it is advisable that the company increases its investment in strong risk management system. Prices, improving internal controls, carrying out routine risk assessment, and installing sophisticated digital monitoring system to spot and reduce fraud. Then, the conclusion is that based on the overall data, there is significant positive relationship between current ratio and average collection period. Higher liquidity is associated with longer collection period. Then, significant negative relationship between current ratio and ROA. Higher liquidity is associated with lower asset profitability. These findings suggest that while increasing liquidity may improve a company's ability to cover short-term obligation, it may also lead to slower receivable collection and reduce efficiency in generating profit from assets. That's all from me. Thank you.